Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it looks like silver has bottomed. At least I'm going to share with you my analysis, which suggests that that may in fact be the case. And, this is a welcome development after the very, very sharp correction that we have seen over the past week. But my feeling now is that the worst is behind us. So I'm going to tell you why. And then I'm also going to share with you what developments would lead me to be even more confident that silver is headed to new record all-time highs in the near future. But before we get to all of that, if you want a chance to win some free silver, then check this out.
For the first time ever, SD Bullion is giving away 2 monster boxes of silver coins, but not just any silver. Learn more today at sdbullion.com/sweepstakes.
All right, so let's do a quick recap of what has taken place in the silver market since we last spoke. So this was something I posted yesterday at 4:26 p.m., shortly after equities markets closed, and I wrote, silver is testing key support here, so either we're at the bottom or we're on the verge of a precipitous plunge. Probably wise to have some form of downside hedge in place just in case. Yeah, it's never a bad idea to have some kind of protection in place in a market like we are experiencing. Now, this actually did play out as a plunge. Coming here to the 4-hour silver chart, you can see that was when silver was here at 73. And what we ended up getting was a decline all the way down to a low of $64.03. So that was, a plunge from that level. Silver shedding about $9 from the time I made that post. But what we saw from there was a strong bounce and a nice recovery. Silver's price is up almost 10%. In fact, it was up 10% just a few minutes ago. It's up 9.62% on the day as of now, $77 and change. And so I want to draw your attention to a few things on the chart. So after we had this big correction, I said that we needed to give things a few days to really shape up for the market to digest what had just occurred, because this was like a record-breaking sell-off. I think actually at the lows. So last night when we were at $64, the sell-off from $121 down to $64, it actually exceeded the COVID sell-off in terms of percentage drop. So this was a huge move down in the silver market. Almost a record-breaking drop. So we needed a few days to let things sort out. And now, finally, the chart is sort of giving us some structure here. So it can give us some kind of idea of what is occurring. Now, I'm going to read for you a post. So, if you're familiar with TA, you're probably looking at this chart and you can kind of understand what I'm going to be getting at here in just a minute. But let me read a post for you, just to show that this isn't just hindsight bias drawing this ABC correction after today's recovery. This is something I posted last night around it was about 10:52 p.m. Okay, and this was just after we had gotten that bounce off the $64 level, and I wrote, the silver chart is a setup, not a guarantee, but it's worth tracking closely. And what I'm seeing, a possible falling wedge, that's converging trend lines in orange there, a clear ABC corrective structure, and importantly here, we've got declining volume into the lows. Now, let's take a look real quick just to familiarize everybody with this chart pattern if you've never seen it before, and we'll do this real quick for those of you who are familiar. But this is Investopedia.com, their article on wedges, and typically a downward falling wedge. So you have these converging trend lines heading down. You've got declining volume. That's an important characteristic of the falling wedge. What that means is selling pressure is declining as the price falls. And then this is typically a pattern that breaks out to the upside. It's a corrective pattern within a bull trend. And I believe that that is what we are seeing on the silver chart right now. But just the fact that this has happened, right? You've got the Elliott wave ABC correction. ABC, that's how corrections often work when they are in the midst of an uptrend. You get a 5-wave move higher, according to Elliott wave theory, and then you get what's called an ABC correction. You get a sharp sell-off, a recovery that doesn't actually reach the previous highs, then a further sell-off, and then that typically is the pattern that sets you up for a renewed move higher. So a bullish scenario here, I write in this post, is a breakout above the wedge plus follow through on rising volume. That would favor this being a corrective reset within a larger uptrend. Because while a falling wedge is typically interpreted as a bullish pattern, like higher probability that it breaks to the upside, sometimes they resolve to the downside. It's not a guaranteed thing. It's just, probability-wise, you're more likely to go higher than lower. But a bearish scenario would be a decisive breakdown below the lower wedge, so that lower trend line there, with expanding volume, meaning selling pressure is resuming. That would suggest that the correction is not finished and lower support needs to be tested. So what we ended up seeing today was a recovery. Let me flip volume on here. A recovery with some rising volume, but we're still not out of the woods yet. So what I would really like to see here before I think we can say that gold has, or rather silver, has definitively bottomed at $64 is we need a breakout above this orange trend line. Now, I mean, that could happen today. We still have about 2.5 hours before equity markets close, a couple extra hours before futures markets close, but this might be something that we have to wait until next week to see. And it is always possible that we could test that line and fall further. That would kind of invalidate the whole ABC correction thing, but it wouldn't necessarily invalidate the wedge until we actually see a breakdown below. So this is all something to keep tracking. But I think based on today's performance, up right now, 8.5%, still a very solid day for silver. It's looking more and more like we have bottomed. Now, keep in mind, I mean, nothing has fundamentally changed here. We still have 38.7 trillion. There we go. We finally crossed that $38.7 trillion line. National debt. This is growing at an exponential pace. We have an exponential curve on this. This is the federal government's debt service cost, interest payments on that ballooning debt. So they're going to have to do something to get this under control. They are not cutting the budget. For those of you who aren't aware, they're not cutting spending, right? They're not raising taxes. In fact, they're cutting taxes. So what does that mean? Well, the only way to get interest rates down and to get this debt service cost down is for the Fed to print a lot of money and debase the dollar so that the debt can be paid off in devalued currency and to get the interest cost down. Otherwise, this is going to turn into an exponential debt crisis. I mean, we're already there, right? Look at the slope of the line from 1950 to 2020, and then look what happens in 2020 to the slope of this line. This is terminal endgame for this debt bubble. Fiat devaluation is right around the corner. Could happen this year. Could happen tomorrow, right? If the cracks start to show, financial system, Fed's going to fire up the printing press. I mean, all this talk about, this Warsh guy, he's going to be the replacement for Powell. That was part of what sent silver tanking on Friday, was that announcement. We might not even make it to Powell getting replaced. Powell doesn't get replaced until May. This thing could pop at any moment, right? There's rumors. Apparently, Scott Bessent mentioned this recently in an interview he was giving, where he said that he acknowledges there's rumors that the Chinese could be making a gold-backed token to rival the dollar. I mean, if that happens, Fed has to fire up the printing press day one just to support this thing. So, look, nothing has fundamentally changed. So the fundamentals support higher silver prices here. But we just need to wait for the market to digest these recent moves. And I mean, honestly, pretty normal to have a correction when you move up as fast as silver did. Now, I think we're done with the corrective phase. Anybody who bought the dip last night, if you got silver for under $70, well done, because it wasn't there for very long. So I didn't personally do that. I bought some silver around $74. Thought that was a good deal. Guess I could have held out, but it's not about timing the markets. It's about dollar cost averaging, buying the dips, etc. At least for me, not financial advice, of course. So we got to keep an eye on this. If we get a break above this, we're in good shape. What else is happening in the markets today? Gold is almost back above $5,000. Now, gold had formed this falling wedge of its own, which I had been tracking on the chart here. It's a very short-term pattern. This is, again, a 4-hour chart, so these aren't even daily candles. But today, gold breaking out of that falling wedge. So that's a bullish development for gold. On this 4-hour chart, you see we got some nice candles here. So gold's looking good. I think that kind of confirms that the recovery is in for silver. Let's take a look at some of these other indicators because, I like confirmation, right? A pretty chart picture is nice. A pretty falling wedge is nice, but what else is there to confirm the bullish thesis for silver? Well, the RSI is looking good on the 4-hour chart here. You can see it actually dropped all the way down into very oversold territory here. And the RSI, if you're not familiar with that, it's just a measure of kind of how overbought or how oversold an asset has become. It's not a perfect tool. It's just something you use to confirm, like having a low RSI doesn't mean something's going to recover. Having a high RSI doesn't necessarily mean that something is going to crash. But when you're talking about, a run to new record all-time highs, having the RSI kind of reset down here at 43.18, and yeah, that correction, it reset the RSI pretty good, a little better than, some of us would have liked, but, it was a good entry point, I think, at these, lows. But anyway, the RSI is very low now. So this has plenty of room for silver, if it breaks out from this wedge, to run maybe to record new all-time highs. I'm not saying that's going to happen immediately, but anything could happen. And, given the fundamentals, I do think that it is a higher probability event that we get a short, rapid recovery than some kind of drawn-out sideways consolidation. Either one is possible. I wouldn't rule either one out, but the way that the chart is shaping up at this point, I think it skews my analysis towards the bullish outcome. Okay, on the MACD here, so you've got the blue line, that's the MACD. The orange line is the signal line. And two ways you can kind of interpret this. When the signal line, let's say when the blue MACD line crosses underneath the signal line and you are above the center line, right? That's where this little histogram with the green and red bars shows up. So this is the center line where my mouse is now. If the MACD is above that and you get the blue line crossing under the orange line, that is a bearish indicator, a sell signal. Now, again, you can't use any of these indicators by themselves, but, a bunch of them confirming the same thing, that's a good sign, right? So that is a bearish signal. And you can see that was pretty well timed here on Thursday, January 26th. We got this notable bear cross here, and then that preceded the big sell-off. So I like the 4-hour MACD because it seems to be the best time frame for getting something that actually is a leading indicator. Then you can see we got a bullish MACD cross here, so we're under the center line, and the blue line crosses over the signal line. That's bullish. We did get further correction, but we just got another bull cross. So that is a good sign. That confirms that upward momentum is resuming here. And the one I really want to draw your attention to is this one, accumulation distribution here at the bottom. And this is an indicator that kind of tells you whether people are distributing, meaning getting rid of their silver, or if investors are accumulating. And what this looks at is it looks at the price candles on your chart, compares it to the volume, and it gives you an idea of what investor behavior is here. And I want to note that you've got accumulation occurring in silver leading up to the crash, but we did not get a decline in accumulation with the crash. So you're seeing what's called a divergence there, where the accumulation is actually ticking higher as the price corrects. So a divergence there is something that needs to be examined. You really need to look at there, and that is a sign that this is not the end of the bull run, that it is a corrective phase. So we've got several TA indicators here giving us a bullish disposition towards silver. The price action, which is, pretty important, is also confirming that. So look, it's not financial advice. I'm not telling anybody what to do. I'm just giving you my analysis. And I wouldn't be surprised if next week we get a breakout and a resumption of silver's move higher. I would not be surprised if we're not putting in new record all-time highs by the end of February. I would not be surprised if we are back above $100 and headed to new record all-time highs. Okay, a few other things. Let's take a look at platinum. Platinum's doing pretty well here, bouncing off of this lower trend line. So that's a good sign as well. Platinum has had support here. This is a long-term trend line. Also notice that accumulation is remaining elevated in platinum despite its sell-off. You're also getting a bullish MACD cross, and the RSI has reset, so very similar to silver. I would say it's also in sort of a consolidation pattern here, so look for a break above this trend line, like above, say, $2,500, $2,600, to indicate that we're headed higher there. Let's look at palladium. Okay, palladium, we can maybe extend this trend line out. Palladium just chopping sideways here, probably getting ready for a big move. They're very, very tiny little market, so it can move a lot. We've got the miners. Miners look like they are in some kind of a descending channel. Let's see, we can draw that on there. So that's what I'm just kind of doing in real time, but that does look like a falling channel, which could be a bull flag, right? And then we get a flagpole to come out of that. RSI on the miners has reset. We haven't gotten a MACD cross there just yet. Now, notice that the miners, the accumulation distribution, we didn't get that price divergence. So it looks like investors actually were dumping some of their miners on this sell-off. So, just a piece of information there. Bitcoin. So Bitcoin had a very sharp decline from this trend line that we had noted, and it looks like it's recovering today along with the metals. But one thing I would look at here is, one, look at the accumulation distribution on Bitcoin. So Bitcoin definitely getting sold, people distributing their Bitcoin, dumping it out on the decline, unlike silver. And it looks like it's retesting this line, that line. We got to switch to a longer term chart to kind of see what that is indicative of. But that was the previous highs from 2021, and then also an area where Bitcoin chopped a lot. Let's get rid of this trend line. That's like the head and shoulders neckline that it just fell through. But so you can see that this is an important trend line, and notably on its chart, Bitcoin was just rejected from that level. So it could be that Bitcoin just broke down, retested, and it might be about to break down again. Not too sure about that one, but that's kind of what that looks like to me. Let's see. Bond yields, Japanese bond yields ticking back up again. They're 30-year back on the rise. Nowhere near that big spike that we saw, but this is something to keep an eye on, right? And talking about global financial crisis, you start seeing bond yields tick up. That's another sign that the Fed may be required to intervene. We're not there yet, but it's always something that you got to watch. And clearly the 30-year bond yield, you zoom out, is rising on the Japanese 30-year. I also, let's look at silver here. And there's a couple of news stories I wanted to cover with you as well. Let's see, was there something else with silver? I think that, I know. Hold on, let me adjust this. So we're going to make this a 50-day moving average here on the daily chart. And you can see that silver is testing that right now. So it fell below its 50-day moving average. It's testing that right now. That's another key level, which you might note sort of aligns with the top portion of this this wedge. So breaking back above that and breaking out of this wedge, very bullish for silver if we get that. We're not there yet, right? We're kind of retesting this level. So that would be the thing that would really make me feel confident that silver is back and the correction is over. We just need to get above those key levels. There was another chart that I wanted to share with you that was from another person on X. Oh, by the way, I was sharing with some X posts with you. If you're watching this, if you don't follow me on X, if you're getting any value from these live streams, the one thing I want you to do is go over to X and follow me at x.com/stacksmarter, because that is where I am able to post, in real time. I can't always jump on a live stream, but if I see something remarkable in the markets, I will post it on X. So follow me at x.com/stacksmarter. If you're not on X yet, go create an X account and follow me on x.com/stacksmarter. All right, so this is from Tradey2 Trader. I guess I don't even follow this guy. I should follow him. But he posted this chart, which I thought was a good one. Goes all the way back to 2023, and you can see he's drawn this trend line in silver, which the price touches many times. So 1, 2, 3, 4. So it was support here, then it was resistance. Touched it here, kind of tested it, bounced up, touched it here, touched it here, touched it here, touched it here, broke through it here. And you'll note that once it broke through this, it was like off to the races. Now we've fallen all the way back down to this long-term trend line at that $64 correction and bounced hard. So I think this is a very valid trend line. So I'm going to go ahead and repost this and like it and bookmark it so I can come back and look at it again in the future. But This post definitely, I think, illustrates a very nice technical aspect of silver here that we just touched. A very long-term trend line bounced hard. That's a good sign, right? That's a sign that we're going to stay above that trend line and we're going to see further gains, at least in my book, right? Let's see. Let's take a look at what's happening in China. So China right now, a kilo of silver is about 18,600 Chinese yuan. This is on the Shanghai Gold Exchange. Now, this is kind of interesting because that comes out to about 2,680 US dollars and 87 cents. And if you do the math on that, turn it into troy ounces, it comes out to a price of about $83.38. So that is higher than where we are currently at in the US or in Western silver spot prices, which is around 77.50. But that's a much smaller premium than we have seen thus far. Could be that the impetus to arbitrage the silver price is diminishing. This could be a sign that the powers that be, they're allowing the silver prices to rise. I mean, look, this is normal market action too. Silver should be much, much higher, I think, than it currently is. It's still cheap, very cheap after this correction. But maybe this is, they're allowing the markets to kind of normalize, to stem the flow of silver from west to east. It would make sense, right? If you don't want to lose all your silver, it doesn't make sense to allow there to be this huge premium to foreign silver prices, because what that means is that, investors, they'll buy the silver here, ship it over there, sell it at the higher price, book the profit. So that might be stemming the flows. That's something we're going to keep an eye on as time marches on here to see if those premiums reemerge. But if you have a theory about why maybe those are normalizing, feel free to leave it in the comments or put it in the chat if you're watching live. And then let's see, one other interesting piece of information. We do have the CME Group once again hiking rates, margin rates on metals. They're also adjusting their bond requirements for agriculture, cryptocurrency, energy. This is effective today at the end of market trading after the close. But that's not really anything to worry about when it comes to the price of silver, because they've already made the announcement. That's already all priced in, right? And we're still seeing silver recover. Now, one thing to think about with margin hikes is we typically think of that as a way for like the CME Group or, these exchanges to cap the silver price to trigger a sell-off. That's not necessarily what happens when they hike the margin rates, right? The margin rate cuts both ways. It's a double-edged sword. So it means that you have to maybe sell if you are leveraged, meaning you're investing with borrowed money. They basically just say you can't use as much borrowed money. That's what hiking the margin rate means. You need a higher percentage of equity stake in the position. The percentage that can be margin is lower when they hike the rate. But that can also work to investors who are leveraged to the downside, right? Who are shorting with leverage. They can also be forced to cover their short positions and buy the underlying asset when margin rates are hiked. It cuts both ways. It just oftentimes does seem to have the effect of driving the price lower. But all these paper shenanigans, none of them are going to really matter at the end of the day. There's still, in March, the open interest at the COMEX is still greater than all of the silver that they have in their warehouse, right? By a factor of 4 or something like that. So, at the end of the day, I suspect that if they continue to allow this kind of like smackdown of the paper price, where you're going to get this rush of physical buying, gobbling up all the physical, as if there wasn't already enough demand for physical, like abroad and among, it wasn't really retail investors, but institutional investors. But now retail investors are getting on board. The paper price is very likely at some point during this repricing of the metals, which is what this is. This is not a normal bull market. This is like, the death throes of the fiat global currency system. At least that's my interpretation of it, which is why it's not going to stop now after a correction, right? It's going to keep going, albeit with volatility, because what we're actually seeing is the whole global financial system changing. It's being shaken to its bedrock. they're not going to tell you that, right? Yeah, I know that's not what it says when you watch CNBC, but that's because like there will literally be a banking crisis and hyperinflation, and they'll tell you everything's fine, right? That's their job, right? It's to control the masses, prevent panic, keep the wheels on this thing as long as possible. But the paper prices are going to become more or less irrelevant, and ultimately, I suspect, I mean, my forecast is that someday, within the relatively near future, not meaning this year, next year even, but, within the next couple decades at the very max, there's going to come a day when the paper prices doesn't matter, and all that matters is the number of ounces that you have in your possession. If you agree with that and you think that ounces matter the most, do me a favor, subscribe to the channel, smash the like button, share this video with your friends, follow me on X, subscribe to the free newsletter with the link down in the description, and leave a comment down below to let me know what you think about all the topics that we covered in today's live stream. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.